and welcome to USBC's Decoding New Reporting for Firms, What You Need to Know Now. I'm Philip W. Dunn, Program Manager at the U.S. Black Chambers, Inc., the national voice of Black businesses, representing over 170 Black chambers of commerce and small businesses across the nation. Now, our foundation rests on 5 pillars of service, and they are advocacy, access to capital, contracting, entrepreneurial training, and chamber development. On behalf of our president, Ron Busby Sr., our board, our staff, our chambers, and our members, I want to welcome you all for attending this very important training and webinar on this topic today. Now, this series is produced in collaboration with our chambers of commerce, offering technical assistance and resources nationwide through the U.S. Small Business Administration's Community Navigator program. Now, we cordially invite you to engage with us today, and please share your insightful questions in the Q&A box, and rest assured they will be addressed post-discussion. Now, it is with great honor that I introduce our first speaker, Katrina M. Kraft, who's an accomplished CPA, a business advisor, and she has over 2 decades of experience in accounting, tax strategy, and business development. Now, she's worked with both startups as well as Fortune 500 companies, providing her with a deep understanding of business operations and all things accounting. Now, through her firm, CM Kraft, Katrina offers tailored accounting services and strategic advisory to industries such as real estate, entertainment, marketing, healthcare, and publishing. Now, as an educator, Katrina is passionate about empowering individuals to achieve financial success, and she offers her wealth intelligence course to business owners and individuals. Now, her expertise has been featured on various platforms, including The Michael Baisden Show, The Ricky Smiley Morning Show, CW33 TV, and WFAA 8 News. And she's a contributing writer for Easy Accounting for Real Estate Investors. Let's welcome Katrina, as well as our next guest, who is our esteemed panelist, Alex Ford. He's Vice President at Prism Group and specializes in advancing the interest of clients in the tax policy space. So prior to joining Prism Group, Alex founded and operated Halcyon Strategy, which is a boutique advocacy firm representing a various trade association clients on a wide array of taxation issues. Now, he previously worked as a director of federal affairs at NAIOP. Now, this is the Commercial Real Estate Development Association, and as a manager of federal relations at the American Institute of Architects. And he began his career in Washington, D.C., serving as an aide to Connecticut Senator Joseph Lieberman. Welcome both Alex and Katrina. Now, before I turn it over to Alex to get us started, please be sure to drop your name, your business name, your location, and chamber affiliation in the chat so that we can start the process of networking, get to know some of the businesses, get to know some of the entrepreneurs, and then develop this networking afterwards as well. So I want to turn it over to Alex Ford to get us started. Alex, I'm going to ask you to come off mute, and we're going to bring up our presentation, and we are going to get started with this very important topic. Hello, Alex.
Bill, thank you. And you did me no favors there introducing me after Katrina. She's got a very impressive resume, so I'm thrilled to be here presenting with her on this topic, the Corporate Transparency Act, or what I like to call it, basically the most sweeping new statute that pretty much nobody has ever heard of. As you'll see later, this new law that went into effect at the start of this year is going to affect virtually every small business currently operating in the U.S. So kudos to USBC for putting this on and making folks aware of this important issue and their new reporting requirements. And with that, let's get started. Next slide, please. Quick run of show here, what we're going to cover. I'm going to touch on the background and why this law even exists in the first place. Then we're going to get into the real meat of this, the overview and requirements and who's covered under these new reporting requirements, what do you need to report, everything that you need to know. We'll get into challenges for small businesses, what you might expect to experience and some hurdles along the way. And then a couple tips and best practices for navigating this new reporting regime. It's hard to call it best practices because this is all new, but this is just kind of our insights talking to folks and seeing, where compliance might be an issue, where you might get tripped up. So excited to share what we have on that front. Next slide, please. The boring stuff. I won't read this word for word, but basically, you all know the drill. None of this is financial or legal advice. Please, 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 if you have individual questions related to your company or your circumstances, reach out to an expert like Katrina or your attorney, someone to guide you along the way and provide that kind of legal advice. Next slide, please. So how do we get here? This is important to set the context about why we even have this new reporting law. Next slide, please. The origins go back all the way to 2020, actually. So this was passed under the National Defense Authorization Act of that year. This bill is an annual piece of legislation that contains a number of funding items for, as you can guess, national security. For the last several years, Treasury and a couple other law enforcement agencies have been looking at kind of money laundering through shell companies and kind of this shadowy world of finance, how people illicitly move money. Think of, like, you got the image there of a yacht that's, registered in the name of a shell company, and then that's a subsidiary of a Cayman Island. All those complex machinations of how people who aren't supposed to be moving money do so. So their idea was, well, if we can just get the names of the people who own these companies and are moving that money and basically unmask them, then we can really crack down on all that illegal activity. So the way they went about this, unfortunately, was let's take every single entity operating under a certain revenue threshold, and we're going to, under this big web, ask them to provide all their information about their owners. You'll hear this term later, their beneficial owners, personal information, their address and stuff, as a way of finding out who's behind the shell companies, who's moving the money, who are the names behind that. So again, very wide and broad and sweeping, but that's how we got here. I've got a little comment there. What's the result of this? Time will tell, but as you'll see, the whole compliance regime is really based around you volunteering and self-reporting your own information. So it's early days still, but my guess is going to be you're not going to have a lot of criminals providing the Treasury Department with their information about their criminal enterprises. Tony Soprano is not going to fill out this form and give his name and say, here's exactly what I'm doing illegally. So I really think, unfortunately, the burden significantly will fall on the small business community. But again, time will tell, but that's kind of where we're headed based on the structure. Next slide, please. Again, just to illustrate how far-reaching is this, I would say the most far-reaching effort outside of basically the tax code. The agency that's tasked with administering and implementing the Corporate Transparency Act is called the Financial Crimes Enforcement Network, or FinCEN. They estimate that this year alone, 33.6 million entities will be required to file. Those were existing entities going into this year. Every year after that, they think 5 to 6 million additional entities are going to be affected. So that number is just going to grow and grow and grow every year as new businesses are filed and created. And again, another number that's going to grow is the estimated compliance cost, which is probably lowballed. Even still, $22 billion a year small businesses are expected to pay, whether that's in terms of time spent filing and complying with the new law, or outsourcing those operations and paying advisors and such. So very significant, very far-reaching, and very important to pay attention to your obligations as either a business owner or a employee potentially. Next slide, please. So the meat of this presentation, I'm going to turn it over to Katrina, who's going to cover the who and the what, which is really, really where you're potentially going to get tripped up, what you really need to pay attention to as a filer or a beneficial owner. And then we'll get into key deadlines and some other items, how to actually go about complying with the new law. So with that, Katrina.
I want to bring Katrina in, but Alex, I definitely appreciate you kind of setting the stage there. And there is a question here that I've got to ask. Is this a little bit of overreach when it comes to, or overreaction when it comes to going after money laundering?
I
I
believe that it is. Alex, sorry. I believe it is, and it's going to impact small business owners more than anything. And if someone is doing anything illegal and they are attempting fraud, I doubt that they will report, just as Alex said. There are some requirements as we go through this regarding size of revenue and size of business by employees. They could easily go around, those requirements of who to file, as well as they can pay someone who may not have a legal background, anything on their record, to file for them and say they are the owners and give them ownership. So I really do not feel like this is going to provide the open book that this FinCEN is looking for. Alex, what are your thoughts?
I agree completely. And then, on the practical side, in terms of chasing down criminals, so you've got 30 plus million entities filing, and let's say several employees for each on average. Let's call it three. So you got 100 million pieces of information, out there. What's FinCEN going to do with it? How are they going to comb through that to find the illicit activity? I just think, this is well intentioned, and I think the goals are admirable, but it just really wasn't thought out very well. And now the small business community is really looking at this and saying, kind of like what you got at, are you serious? Do we really have to do this? Is this necessary? And it really isn't. But unfortunately, it's here and seems to be here to stay potentially.
I appreciate y'all's thoughts on that, and that kind of helps. For the folks that wonder, if it is here to stay, why, and then also the possibility that this might get pared back a little in the future if it's too burdensome. So, before we move forward, I just want to share a little bit of a disclaimer here. The information contained within this webinar is provided for informational purposes only and is not intended to substitute for obtaining accounting, tax, or financial advice from a professional accountant. So please consult with your accountant and or financial advisor regarding your specific circumstances. So with that, I want to turn it over to Katrina Kraft, CPA. Katrina.
Thank you, Philip. Let's talk about what are covered entities. As Alex and I discussed, is this really impacting the small business owners unfairly? And I believe it is. Let's talk about who's covered. So sole proprietorships and general partnerships. Now, this means only if you're unregistered or exempt. Some states do not require sole proprietorships to be registered. Other states do. So you need to know with your sole proprietorship, were you registered with your state? If so, you would be required. A general partnership is when two people or more come together and they just form a partnership. I may go to my friend and let's start a business, and we decide to start a business, but we have not officially registered with any state. We would not be required to file this new filing requirement. Sole proprietorships can also be LLCs. Sole proprietorship is how you file your tax. So you could be an LLC. And if you're an LLC filing as a sole proprietorship, you will be required to file the reporting because, again, you have filed with an entity, a state entity. That's what's important, is realizing if you're registered with a state entity, some type of legal status, registering your business. There are 23 types of entities that are exempt from the beneficial ownership information reporting. We will go over those, but I also want to talk about just domestic reporting companies. That would include corporations. We talked about the LLCs. And if you are a partnership that files as a partnership with your state, so you could be a limited partner. You could be a family limited partnership. You could be in a corporation, a professional association, a professional corporation. So there's different types of entities. When I talk about corporations, LLCs, partnerships, there are different variations of those for each state. So you really need to understand the reporting requirements, and if you have filed with your state, those entities, and registered, that's what's important. Also, foreign reporting companies. So a corporation, LLC, or other entities formed under the law of a foreign country that filed a document in the Secretary of State. That means if you are a foreign company, but you decided that you wanted to do business in a state of the US, you also are required to file, because now you have said that you've registered to do business in the US state or tribal jurisdiction. You would also be required to file. Additional reporting companies, let's talk about those. S corps. So corporations, an S corp is a small corporation. It also would be required to file. So if you're a corporation and have elected S corp status, you are required to file. And then any other entities like we talked about that are formed by filing registration documents with your state. So they are considered reporting companies. And as I mentioned, the limited partnerships, the limited liability partnerships, limited liability, limited partnerships, and business trusts could be required to file. So that's important, why you need to really work with someone that understands the filing requirements. Sometimes it may be more than you can do on your own, because when we start talking about who must file and we start talking about the ownerships and who does control, that's all a part of who must file. It could be very confusing, and you want to make sure that you are filing properly. So the 23 types of entities are exempt from beneficial ownerships. I'm not going to go through all the list. If you're interested, I do have a resource page, and we'll talk about that at the end that talks about those. But some of the ones that would be exempt would be nonprofits. They're exempt. Accounting firms. And the reason that we are exempt is because we already have to get fingerprinted, like in Texas, at least CPAs fingerprinted. We have to provide so much information. And these are only CPAs that are registered publicly. So not an accounting firm or bookkeeping firm that's not registered under certain code sections. So that's very important to understand that. Also, credit unions, banks, security reporting issues, money service businesses. So if you have a money service business, like a MoneyGram, they're not required. Broker dealers and securities, you're not required. Investment companies and venture capital fund advisors and insurance companies. A lot of these entities are not required because we already have to provide so much information in order to do business. The IRS knows already about who the owners are, who the people controlling. So those are some of the exempt entities that are not required. But again, there's 23. Let's see, next slide. We talked about who's required, the LLCs, the S corps, C corps, and then the different types of partnerships and limited liability companies as well. Okay, Alex, before I go there, also there are different revenue guidelines on who must file, and then there are employee levels who must file. I think, Alex, you go over that section.
I don't know if we have let's just hit it now, right? And that's the one that I've focused on from an advocacy perspective. And that's how you kind of frame this as affecting every small business. So the big one is one of those exemptions that Katrina mentioned is if you have over $5 million in annual gross revenue and more than 20 employees, then you're exempt. So what this law is saying is if you're big enough, then you don't commit crimes. It's kind of silly. So again, you know, if you flip that threshold around, that means that if you have 20 or fewer employees or 5 million or less in revenue, then you are covered and you do have to report. So if by chance one of those, you're over the threshold for one of those, if you don't meet the other one, you still have to report. So again, that's kind of where, that's where we're coming from in terms of this is going to wrap up basically every small business operating in the country. But with that, key deadlines that you really want to keep in mind for existing entities, that is companies. If your business, where you work was in existence prior to the start of this year, so you had been formed going into 2024, then you have basically till the end of this year to file your initial report. And that's got all the information that Katrina mentioned, or that she'll cover. And it's a whole laundry list of stuff. This is a long form and it's a lot of personal information. So that initial report, again, for existing companies is going to be due by the end of this year. For new entities, if you're filing and creating a new business starting this year, then you've got just 90 days to fill out to complete your initial report and submit it. As if starting a business isn't tough enough, all the costs and expenses and things going on, you got to remember that you've got 3 months to file that CTA report. So very significant in on that front. And going forward after your initial filing, you only have 30 days to update and submit changes. So if your name changes or you move, your driver's license expires and you got to get a new one, you get a new driver's license, passport, that kind of thing. You've got 30 days to submit that information. Or as you'll see, you could be subject to significant fines and penalties. Next slide, please. And to that point, civil penalties, $590 a day potentially for being in violation. Whether you don't file, whether you submit incorrect information, and that's capped at $10,000, but that adds up very, very quickly. And we're basically talking about a paperwork error that could cost you significant money in fines. And it could get even worse. Criminal penalties, the statute lays out potential for those. In addition to those fines, there are felony charges and jail time on the table for willful neglect and failure to comply with the new law. So this has teeth, and this is significant. And there's a lot of gray area in terms of, well, who's responsible? Let's say I have somebody who should be on the report that works at my company. I'm the one doing the filing. Who's liable for penalties if they don't provide information that changed and I need to submit an updated report and I don't do that? Is the filer on the hook? It seems to be that that's the case. So, beyond just the potential for these penalties, there's a lot of liability to go around and things that you need to pay attention to and really have your T's dotted and your T's crossed and your I's dotted when you go and file your reports. Next slide, please.
Thank you, Alex. Alex mentioned there's a plethora of information that you have to provide, and a lot of that information is very sensitive information. My concern is if you're not the filer, but you are a person who must provide their information, how secure is your information giving it to the person who is filing? What type of systems are they ensuring that if you're sending information through unsecure emails, are they storing it somewhere in the office where anyone could see it? Are they securing it through some type of secure portal? So those are some of the types of information security that I would want you to make sure anybody who's helping you file, even if you hire someone to help you file, make sure that they have secure method of receiving your documents, and also make sure they are going to secure it safely, or when they finish with it, destroy it. So that's very important. Let's talk about the BOI reporting requirements. In the report, it collects the following information about the reporting company and its beneficial owners and company applicants. That's why when Alex talked about the applicant is securing the information and filing, his information or her information is also collected, as well as the beneficial owners that we described who may have to file. You would need to provide your full name, any DBAs or trade names. So if you're doing business as a DBA, the principal U.S. business address, formation jurisdiction, so your state, tribal, or foreign, what's your jurisdiction, and your IRS taxpayer ID. So your TIN, which is your EIN number, TIN, and Social Security. All of that would be required. Also, that's the reporting company. But if you are a beneficial owner and the company applicant must also provide their full name, their date of birth, their complete residential street address, depending on the circumstances. Company applicants could use the business address. It is depending on that. Your personal identification number, your issuing jurisdiction, and an image of one of the following: a non-expired U.S. passport, a state driver's license, some other document issued by a state or local government or tribe. And then if you have a foreign passport, if you don't have one, another form of identification in the U.S., that could be allowed. So as you can see, this is a lot of personal information that we usually want to keep very secure. We definitely don't want anyone to provide our information on the black web, so people can then go out and steal your identity. That's why it's very important. Whoever you are working with, if it's a company or the filer, make sure they have methods of storing your information securely and receiving your information. It's just very important. And I just really feel like this is a burden on us. And like Alex mentioned, what is FinCEN going to do with all this information? They mentioned that it's secure. Do we know that it's really secure? We've seen that different agencies have been hacked. You know, federal agencies, state agencies have been hacked. So now they have everyone's information, and I'm concerned with the security of that. Next slide. So we talked about the personal information, what's required. Next slide. Okay, I want to talk about one more thing, Alex, before I turn it over to you. Alternatively, instead of providing all of that information to the filer who's filing on behalf of the company, you can get a FinCEN identifier. A FinCEN identifier is a beneficial owner or company applicant has attained a FinCEN identifier number. So it's your unique number. So instead of you providing all of this information to the beneficial owner, the company applicant that's filing for the beneficial owner, you can get your own FinCEN number. That way you're submitting your information directly to the FinCEN department. You have this unique identifier number, and you provide that FinCEN number to the applicant that's applying for the company. That keeps a little bit secure, at least between you and maybe various entities that you may be required to file under, because you have control as a beneficial owner, or you have some type of ownership, 25% ownership. And when you think about partnerships, a partnership could own a partnership. So you may be in a partnership, and because you have 100%, you may have 25% of another partnership. So it could go down to various levels. And so I'm concerned about how many levels of people can have your information. So a FinCEN identifier may be a good way for you to try to protect some of your information. At least it's just going to the FinCEN department and they're controlling it, instead of you providing your information everywhere. Because if you're involved in 10 companies and you have control, or you have the required ownership, you could have your information in a lot of different places that is not secure, and you have no idea. So you're not required to get the FinCEN. It's definitely something you can do. It's not a requirement, but for me, I see that it could be very important as a way to protect your identity the best you can. Alex?
Well, that's a great point too. If you are involved in, let's say, 10 different filing companies, having one FinCEN identifier tied to that means your information, let's say it does, worst case scenario, get hacked, the government database, then you're showing up once instead of 10 times. So it's a little mitigation, in the worst possible scenario. Yeah, and helpful, right? You're not submitting 10 different forms. So something something definitely to look into, right?
And also, Alex, I forgot to mention, it's beneficial because if your address changes, your name changes, you only have to update it once. You only have to update it with your FinCEN identifier instead of trying to then go to each identity. As you mentioned, Alex, who's responsible if anything changes? Well, if the applicant is responsible, the filer, now the FinCEN number allows the beneficial owner to only change once, and it will carry over to all of the entities that they're required to report in.
So in terms of submitting reports, it's honestly pretty straightforward. It's basically like I've gone on and played around with it, and Katrina, I'm sure you've been in the weeds on it, but it's basically kind of like a Google form. It's kind of how it looks. It's just really long. I mean, there's 50 plus line items that you need to fill out. So tracking down that data and figuring out who has to report, who you're going to put on your report, that's going to be the toughest thing. But really, you can go online, submit it through their online portal, or complete a PDF and scan it and upload it. So at least, silver lining here with this new regime, they have made it simple on the very, very back end, but you're going to spend the bulk of your time probably figuring out, how to comply with it rather than typing in that information. And as noted there, they do have a lot of information on there. I highly recommend starting there, looking through their FAQs and their small business compliance guides, and kind of starting there and seeing, if you have any outstanding questions beyond that. Next slide, please. So, in terms of the actual real world effect, your compliance burden will vary, your mileage will vary, that kind of thing. For let's say a single member LLC, assuming your data stays secure and doesn't get hacked or any of that, this will basically be a headache. You'll have to remember to file at the end of the year. You're going to have to remember to update it if some of your personal information that was submitted changes. So for a lot of businesses, honestly, this will be relatively simple. Where things get complex is where you do have a lot of that gray area. Do you have, let's say you have an employee that is a beneficial owner. You're going to have to report their information. And let's say, you see on social media that they got married. Now what? Do you have to go ask them, hey, did you change your name, after you got married? All this stuff. Like, hey, I saw you bought a new house. What's your new address? We're now in this bizarre world where you're going to have to look through, your HR processes and start figuring out, how do we pester employees every month that we know are going to have to report? Do we ask them every week? What's the process here? It's just another layer of complexity for companies, even that don't have complex structures at all. So there's just a million different scenarios where there's gray area, you're going to have questions, and you're either going to spend the time to figure it out or outsource that. And all that costs money, and it's all burdened, again, largely on the small business community. Next slide, please. So, in general, what you can expect, though, aside from those individual circumstances, again, outsourcing, expenses, the administrative burden, the FinCEN estimates that it's going to take 3 hours for the average filer. I think that's very, very low. A lot of groups have pointed out, based on polling of their membership and their companies, that they expect it to be significantly higher than that. The privacy concerns that Katrina outlined, that's probably, top 2 on my list of concerns personally. This is largely duplicative. A lot of this information is collected at the state level or otherwise. It goes back to that question, why are we doing this? The legal risk of filing an inaccurate, unbeknownst to you, an inaccurate report. Who's at risk here? You really want to be putting yourself or your employees in that kind of position. Somebody's going to have to be, unfortunately. And again, back to the start, how much is this going to effect-wise have on deterring illicit activity? And I think it's going to be negligible, unfortunately. Next slide, please. So in terms of best practices, Katrina hit the big one. Get a FinCEN identifier, at least think about it, look into it, talk to folks, seek guidance on that, but it can be very beneficial in terms of making sure you're accurately filing and in compliance with the new law. At the top there, the one tip, again, not legal advice, but if you are considered an existing company, so again, you were formed prior to the start of this year, unless you're like me and very forgetful, I would highly recommend waiting to file as late as possible this year, just because, you know, you go back to the deadlines. After your initial report is submitted, any changes after that start the 30-day clock. So if you wait until December, for example, to file your initial report, you're putting off, especially if you know that you're going to have some information change, you're just avoiding that little step of having to remember to submit an updated report and submit it quickly, frankly, within 30 days. So just a little nice buffer there. If you can remember to do it late, you know, it's marginally helpful. And again, bottom line, when in doubt, seek counsel, seek a professional, and really get the direct answers to your individual questions. Next slide, please. Real quick, notable developments kind of on the advocacy, legislative, legal front. There is a constitutional challenge to this statute playing out in Alabama federal court. The National Small Business Association in November of 22. This case has been going on for a while now. We're still awaiting a ruling. Challenged the constitutionality of the CTA. If a judge rules in favor of the plaintiffs, you could see this struck down in its entirety. Another reason to wait until the end of the year to file if you're an existing company is, you know, fingers crossed, this may not even be around potentially. And it's a bit of a long shot, but it's you know, it's definitely a scenario that could play out. There is legislation that passed the House late last year, very quietly, oddly. 420 votes in favor, 1 against. You never see anything that broadly bipartisan support in Congress. The crux of the legislation, it makes a couple tweaks, but basically it's allows existing companies an extra year to file. So you'd have 2 years instead of 1 year if this was enacted. And other than that, you know, there's been some rulemaking, some tweaks that FinCEN has made along the way in terms of deadlines. Most recently, unfortunately, the daily penalty, the civil penalty, was set at $500 a day. They just updated that to make it $590. So, you know, not all changes are beneficial from their end, but something to keep an eye on is just how the regulators are tweaking this statute as we go along. Next slide, please. And that's it. I mean, just a call to reach out anytime, right, Katrina?
Yes, and I do want to go over the beneficial owners. I know we talked about it. This mandate is so comprehensive that we're going to have to do multiple webinars on it, but note that a beneficial owner can be anyone who's directly or indirectly exercises substantial control over the reporting company. So you don't necessarily have to be an owner. You could be the CFO that is exercising control of a company, and that could make you mandate you to file. Also, if you own or control at least 25%, then you must file. So I do want to point those 2 things out. That in itself, who exercises substantial control? I mean, that's fact and circumstances. And that's where I feel like it hasn't really been defined really well, that, you know, as a CPA, do I have financial control over my clients? Some clients I may write checks for, but they are telling me to. So now am I in control? Because I say, well, you don't need to pay this now, you need to wait. So there are some different rules, and I don't think that everything has been really laid out clearly on who would exercise substantial control. Alex, have they talked anything, you know, any rulings or any conversations about kind of defining substantial control in a better way?
They have not, and they really need to, whether it's in terms of regulations, the statute, or even just a helpful FAQ, because what they have on their website honestly does not get into. I mean, you can think of a million different scenarios where it's
Mhm.
you really don't have an answer of substantial control. Like you said, your example is perfect. I mean, let's say you have a client who on all financial matters, you know, it's hey, whatever you say, we listen to you, we trust you implicitly. Are
Mhm.
you a beneficial owner because you have substantial control because you're, a decision maker in the organization? It's really, really vague, and
Mhm.
it's going to be tough in a lot of scenarios to figure out what that line is, where somebody, because the shareholder part is easy. You look at somebody, if
Right.
you have 25% or more, equity stake in the company, that's the easy one. It's
Mhm.
it's the duties test that's
Right.
really going to trip people up and generate a lot of questions.
Right, because some of the legislation or the mandates that I've seen, they've defined it as a senior position of authority. So like a president, CFO, CEO, or COO, or general counsel. So you could be an attorney for a firm, general counsel. And then they talked about if you have the authority to remove a senior officer. So what if you are a director, but you can remove a senior officer and the majority of the board? Like, I mean, it's just so much that I have questions about, that I'm thinking about, but some small business owners, I mean, wouldn't even think to that level to ask those type of questions. So now they're going to be penalized because they have not reported that person. It's just really, I think they need to think about this a little bit more, give a little bit more time, in order to answer those types of questions.
Well,
Philip?
Alex, Katrina, first of all, I want to thank you both. This has been very helpful, very informative. There are a couple of questions I'd like to ask on behalf of our audience. First question, this is a FinCEN requirement. Do we anticipate any of these filings to trigger IRS audits? Is that something that businesses should be concerned about?
Well, it could if the IRS and FinCEN are talking to one another. Yeah, that's the thing. Right now, the IRS is already burdened. They're trying to hire because they haven't done audits uh, like they used to do, like say over the last 6, 7 years. They're not up to speed. So the IRS is trying to start doing more audits, period.
Mm.
So I don't know if FinCEN would be anytime soon be ready to provide information to the IRS about, illicit behavior. Maybe they would tag something, but not just ordinary people filing.
Yeah, that's an interesting question because I have heard lately a bit from some practitioners, but a lot of more businesses on that side, where it's almost the opposite. Their concern is, let's say, God forbid, you get audited by the IRS, and then they come in and say, well, you didn't file this correctly. You got this wrong, you got this wrong. And then you're looking at, again, 10 grand in back penalties, jail time potentially. So it's kind of that combination that's spooking people.
Mhm. And
Mm.
then a question that I have on behalf of businesses that may want to voice their concerns about this requirement. Who do they reach out to and say, "Hey, I think we're being unfairly, you know, burdened with this new requirement. Uh, Perhaps you should consider redesigning this requirement or doing away with it." Who should they write to?
Well, I would say, coming at this from an advocacy perspective, it can feel futile at times, but we've got a bill that passed the House overwhelmingly that's sitting in the Senate. Senator Tim Scott from South Carolina has picked that up and run with it, but he's facing some pushback. So if we're talking about that legislation that would delay by a year for existing entities to file, just a little bit of breathing room, let's give businesses an extra year just to understand what they're dealing with here. So reaching out to that office, reaching out to your members in the Senate, they're going to have to hear about this. And I think that drumbeat is going to pick up throughout the year when people figure out just what goes into this, how complex it is, and how much time and energy they're going to spend on this. that hopefully that's what's going to change it, and that's what's going to move the needle on Capitol Hill, is just people speaking out and telling your story, basically.
I appreciate that, because I don't want our businesses to feel powerless and to feel like they don't have a voice, but definitely give them an outlet to respond and to share their thoughts and their challenges in meeting these new requirements. And so with that, I know that we have come close to time. And so what I'd like to do is first, I want to thank our panelists, our very esteemed speakers, Katrina Kraft, CPA at CM Kraft, and Alex Ford, the VP of Prism Group, and the Small Business Administration, along with our coalition of 20 community navigator chambers, and you, our viewers, who will be watching our pre-recorded event, all of you who joined us today. And I just want to take a moment too, on behalf of our president, Ron Busby, our board, and our staff, to thank everyone. This is a very important topic, and we are proud to deliver this information to you all as part of our membership benefits to our chambers and to our small business members. So one of the things that we want to do is definitely from this slide, or excuse me, if we go to the next slide, want to remind you all to take a look at our Buy Black platform for our small business members. Make sure that you register your business, and make sure that you sign up for our newsletter so that you can get information on upcoming webinars, such as this series that's going to talk about the beneficial ownership requirements. So definitely want to make sure that you all get signed up for that. And then also follow up with us to take advantage of our upcoming webinars and events that are taking place throughout 2024. We have a number of events that we are planning for our small business members and our chamber leaders. For instance, in March, we are going to have part 2 for the new businesses on how you can make sure that you don't incur any penalties before your business gets off the ground. And then in April, we're going to make sure that we have a webinar around understanding the impact of beneficial ownership in the new regulation. And then we're going to go to part 4, which is step by step in preparing your business ownership report, making sure that folks know exactly what it is that they need to do. So March throughout May, we're also going to have some complimentary accounting and contracting consultations. I believe Katrina Kraft is taking part in leading a good number of those accounting consultations. So definitely sign up for Buy Black, pursue certification if you're eligible, and then sign up for our webinars at our webinars page at usblackchambers.org/webinars, which is right here. And encourage you all to scan our QR code for possible SCORE mentorship. So definitely take advantage of that opportunity. And then always follow us on social media at US Black Chambers whenever on any of the platforms that you are frequenting. So definitely do that. Any questions you all may have, please make sure to go to our website, submit those. You could reach out to me at philip@usblackchambers.org, our programs email at programs@usblackchambers.org. And then Alex and Katrina have both graciously supplied us with their email addresses as well. So without further ado, I'm going to go ahead and conclude us. But Alex, Katrina, thank you for your tireless efforts. I know that this was, this is a new requirement, and you all have come to give us the best of information in order to help prepare our businesses. So I want to thank you all.
Thank you.
Thank you.
All right. And everyone, continue to have a great day and a great week. We'll see you all at our next webinar. Thank you so much.